Are you confused about car insurance? Are you unsure about the type and amount of coverage you should have? Are you wondering about how a deductible works? If you answered yes to any of those questions, then this video is for you. Hello and welcome to Insurance Advisor. My name is David, and this is where I give you the information you need to understand and succeed with money. It is dangerous out there on the road. That is why car insurance, in my opinion, is the most essential type of insurance. Today, I am going to go over the 5 core parts of an auto insurance policy. Then, I am going to talk about how deductibles work and how to choose the right amount for your situation. Finally, I will finish with 3 essential add-ons for your policy. Make sure you stick around until the very end when I will tell you about the only state in the US where auto insurance is not mandatory. If all that sounds good, then give this video a thumbs up. And if you want the knowledge that will help you build wealth, then hit that subscribe button. You are about to learn something new about money. The 5 core parts of an auto insurance policy are bodily injury, liability, property damage, liability, collision, comprehensive, and uninsured or underinsured motorist coverage. Let us go over each of these 5 parts one at a time so you understand what is being covered and how much coverage you should select. First up is bodily injury liability. If you ask me, this is the most important part of an auto insurance policy. If you get into an accident and you are at fault for that accident, your bodily injury liability coverage will compensate the people you injure. I am talking about any medical bills, lost wages, and legal fees that arise due to the accident. Your insurance company will pay for all of those expenses so you do not have to. Bodily injury liability coverage typically has 2 numbers associated with it. Some common options are 10,000, 20,000, 50,000, 100,000, and 100,000, 300,000. Sometimes you will see these options abbreviated as 1020, 50100, and 100300. These numbers represent the limits or maximum amounts that an insurance company will pay out in an accident. The smaller number is the maximum amount they will pay to a single person, and the larger number is the maximum amount that they will pay in total to everyone who is injured in the accident. As an example, let us say you have 50,000, 100,000 limits. You get into an accident and injure 3 people in the car you hit. Your insurance company would pay up to $50,000 to a single person, but no more than $100,000 to all 3 people combined. The lower your limits, the less expensive your insurance will cost. But if you are at fault in an accident and do not have enough bodily injury liability coverage to compensate the people you injure, it is fairly likely that you will be served with a lawsuit. For this reason, I would recommend a minimum of 100,000, 300,000 for your bodily injury liability limits. Next is property damage liability. This coverage is similar to bodily injury liability, except for one key difference. If you get into an accident and you are at fault for that accident, your property damage liability coverage will pay for any damage you have caused to other vehicles, buildings, and property. So if you crunch up someone's bumper, run over someone's mailbox, or drive through someone's front door, property damage liability will pay for the repair, so you do not have to. Just like with bodily injury liability, property damage liability has a limit. Some common options are $25,000, $50,000, and $100,000. These limits represent the maximum amount in total per accident that the insurance company would pay out. Again, the lower your limit, the less expensive your insurance would cost. In a lot of places, you can get as little as $10,000 of property damage liability coverage. But is that such a good idea? To find out, I asked my friend Robert Reinhart, an insurance agent from Miami. Robert says that if you hit another car, a little fender bender might not be a big deal. If you hit someone's bumper coming out of a parking spot, it may only cost a couple $1,000s, and the insurance company would pay for it even if you have that 10,000 minimum limit of property damage. But when it comes to affordability and exposure, 10,000 may not be enough. If you hit a car that costs $40,000 or $50,000 and it is a total loss, 10,000 is not going to cut it. There are a lot of new cars driving around on the road. You certainly do not want to have the minimum amount of coverage if you smash up someone's brand new BMW or Mercedes. That is why I would recommend a minimum of $50,000 of property damage liability coverage. The third type of coverage is called collision. If you get into an accident and it is your fault, collision coverage is what is going to pay for the repairs to your vehicle. If you hit another car, a tree, or a guardrail and your car needs repairs, your insurance company will pay for it if you have collision coverage. If you cannot afford to replace your car tomorrow, I would recommend purchasing collision coverage. When you do, you need to select something called a deductible. I will go into more detail about what deductibles are and the amount you should select in just a few minutes. The fourth type of coverage is called comprehensive. This coverage is similar to collision in that it covers damage to your vehicle, but with comprehensive coverage, it is all about the damage that is beyond your control. I am talking about things like a tree falling and crushing your car, a thief smashing your windows, or a flood inundating your car with water. In these types of situations, your insurance company will pay for the damage if you have comprehensive coverage. Just like with collision coverage, if you can afford to replace your car tomorrow, I recommend getting comprehensive coverage. Again, you will need to select a deductible. Last but not least is uninsured or underinsured motorist coverage. I will let Robert explain this one. Uninsured motorist coverage is a coverage that covers your medical injuries in case a person who hits you or is at fault in an accident against you either does not have enough liability coverage to cover your medical injuries or does not even have bodily injury coverage at all. It also applies in the case of a hit and run where the other party leaves and you have no idea who they are. It is estimated that 1 out of every 8 drivers in the US does not have any auto insurance at all. And an even larger percentage of drivers carries only the minimum state required limits for bodily injury liability and property damage liability. If one of those uninsured or underinsured drivers injures you in an accident, their insurance might only pay you $10,000 or $15,000. We all know that kind of money will not go very far if you have to go to the hospital. Furthermore, if you were driving your brand new Lexus, you could end up covering the repairs yourself. That is where uninsured or underinsured motorist coverage kicks in. There are 2 components to this coverage, one for bodily injury and one for property damage. I recommend you select the same limits for bodily injury as you have for your bodily injury liability coverage. For the property damage portion, I recommend choosing an amount that is slightly more than the value of your vehicle. Depending on what state you live in, there may be one more component to your auto insurance policy called personal injury protection, or PIP. This type of coverage is sometimes referred to as no-fault insurance or medical expense benefits. It is currently required in 16 states and optional in several others. If you have PIP coverage and you are injured in an accident, your insurance company will pay up to a certain amount to cover your injuries. Both the amount and what is covered by PIP vary widely from state to state. There are 3 primary benefits to PIP coverage. First is that it comes before your health insurance. You do not need to meet your health insurance deductible before the PIP insurance kicks in and covers your medical expenses. Second, you get paid quickly. You do not need to wait for any legal processes to play out while medical bills pile up. Third, it helps keep the legal system running smoothly. In states where PIP is required, it prevents a bunch of minor cases for $3,000 or $5,000 from going to court and clogging things up. You will need to get PIP if you are required by your state, but even if it is optional for you, I think it is a good idea to add it to your policy. Now that you have a good handle on the parts that make up an auto insurance policy, let us talk about deductibles. When you add the collision and comprehensive coverages to your policy, you will need to select a deductible. If you make an insurance claim and ask your insurance company to pay for damage to your vehicle, they will write you a check. That check will be for the cost of the repairs minus the deductible amount. Let us say you had a $1,000 deductible on collision and you were to hit a wall, resulting in $4,000 worth of damages. The insurance company would give you $4,000 minus your $1,000 deductible. So you would get $3,000 to fix your vehicle. It is not that you have to put the money out of your pocket. You do not have to pay $1,000 to get the $3,000. They will just deduct it from the claim payment. The same thing goes for comprehensive coverage. If your car was stolen and you have a $1,000 deductible and your car was given a $10,000 evaluation, they would give you $9,000. You get to choose what the amount of your deductible is, and you can generally choose anywhere from $0 all the way up to $2,000 or more. The lower your deductible, the more that collision and comprehensive coverage will cost. The higher your deductible, the less those coverages will cost. As I mentioned earlier, if you cannot afford to replace your car tomorrow, I recommend getting both collision and comprehensive coverage. If you financed or leased your vehicle, both of these coverages will probably be mandatory. The deductible you choose should be based on what you can afford to pay for repairs if your car is damaged and also based on the cost of the coverage. As an example, you might feel comfortable paying $1,000 if you are involved in an accident. So you select a $1,000 deductible for your collision coverage. However, when you are pricing out your policy, you notice that to move down to a $500 deductible is just $2 more per month. If you paid that extra $2 per month, 12 months per year for 10 years before getting into an accident and filing a claim, you would have paid an extra $240 for that lower deductible. But when that accident happens, your deductible costs you just $500. $500 plus $240 is $740. If you went for the $1,000 deductible, you would be at $1,000 when that accident happens. So in this situation, it is a no-brainer to go with the lower $500 deductible. Experiment with different deductibles on your insurance policy to see how the overall cost changes. There is a really good chance that a much lower deductible is just a few dollars more per month. And if that is the case, I say go for it. I also suggest the same practice when pricing out your bodily injury liability, property damage liability, and uninsured or underinsured motorist coverages. Sometimes it is just a few dollars more per month for an extra $25,000, $50,000, or $100,000 of coverage. It is never a bad idea to have some extra auto insurance coverage. And if you can afford to, and it makes financial sense, do not hesitate to go for the maximum amounts your insurance company will allow. Before I wrap things up, I want to talk about 3 more coverages you may want to add to your auto insurance policy. The first one is called gap coverage, and it is worth taking a look at for leased or newer vehicles that are financed. We all know that new vehicles depreciate in value pretty rapidly in the first few years. Because of that rapid depreciation, if you have leased or financed a new vehicle, you could owe more on that vehicle than it is currently worth. That is bad news if you get into an accident and it is totaled, because your insurance company is only going to write you a check for the value of the vehicle. If that check is for less than you owe, you are on the hook for the difference. That is, unless you have added gap coverage to your insurance policy. Gap coverage will take care of the difference between what your vehicle is worth and what you owe on it. If you owe more on your vehicle than it is worth, I think gap coverage is essential. Second is rental car coverage. If your vehicle is in the shop for repairs that are being covered by your auto insurance policy, you are going to need a rental car to get around. If you have rental car coverage, your insurance company will pay up to a certain amount for that rental car. This could end up saving you hundreds of dollars if you have to file a claim. Third is roadside assistance. If you get locked out of your vehicle, run out of gas, or need to be towed, roadside assistance coverage can come in handy. Your insurance company will dispatch someone to your location to help with your problem. Both rental car coverage and roadside assistance coverage tend to be very inexpensive. On my policy, they're each just $1 per month. For that reason, I think both are worth having. There is just one state in the U.S. that does not require auto insurance, and it is New Hampshire. But there's a catch. You need to prove to the state that you have the financial means to cover the expenses related to an at-fault accident. If I lived in New Hampshire and had the means, I think I would still get auto insurance regardless. What about you? If you had the option, would you still buy insurance or skip it? Let me know in the comments. I want to thank my good friend Robert Reinhardt for answering my questions about auto insurance. I will leave a link to Robert's website in the description. If you would like to hear our entire conversation, check out the Insurance Advisor podcast and look for episode number 6. It is available right now on Apple Podcasts and Spotify. If you enjoyed this video, you will probably like this other video I did on term life insurance. You can watch that one by clicking right here. And if you are not already an Insurance Advisor subscriber, then click right here. Thanks for watching. I am David, and I will see you next time.